التالي هو الدكتور فريدي باز، مسؤول رئيسي للشؤون الاستراتيجية في بنك عودة. تفضل.
I will address in English, if you allow me, sure. Mr. Chairman, because I believe that despite my exotic accent in English, it's still a more friendly language for such a bitter topic. Thank you for the opportunity again this year to address the outcome of the political transitions in the Arab world with respect to the increased instability in the region and the huge socio-economic challenges lying ahead, resulting from years of accumulated economic inefficiencies. This is what we call the Arab winter, very little are referring to, preceding the Arab Spring and lasting for years since the mid-70s. Last year, if you remember, we had some fears of seeing the Arab Spring turning into an Arab decade, if not drifting towards an Islamic winter. Today, what we can say less than we are living a real Arab tragedy. The reality is that the causes of unrest are deep, complex, and old, and they involve a lot of problems in political governance, in demographics, and in economics, and none of those can be solved in a few months or a few years. So far, the only game have been an austere choice between illiberal democracies run by Islamists or secular parties propped up by armies. Statistical experience shows that none of them will grant political stability and socio-economic growth in the middle run. Substantial democracies require more than elections. It's only when our truly elected Arab leaders will accept tolerance, diversity, peaceful rotation of power, and inclusive growth policies that the promise of a new Arab world will start to materialize. As a matter of fact, the Arab world have not witnessed as much turnarounds and setbacks as in the last 3 years. And this situation is putting a higher risk on the region medium-term economic prospects, especially in ACTs, in the Arab countries in transition, which are weakened by their shaky political transitions. The situation in ACTs today is much worse than what it used to be 3 years ago. GDP growth rates fell significantly down, FDIs dropped by 3/4, and inflation rates are riding high at 2-digit levels. The situation in ACTs today is very precarious and dangerous, characterized mainly by an official unemployment rate of 24%, which goes up to 33% within the tranche of 15 to 24 years. Women active labor of 24% with respect to an average of 50% in developing countries, and 2.8 million yearly new entrants to the job markets. So therefore, it's not surprising to see the situation leading to more than 1/5 of the population of ACTs living under the poverty line as measured by $2 a day, with 15 million of undernourished in ACTs. It grows up to 37 million across the region, and an self-sufficient ratio of 40% in cereals, and an average inflation rate of 12% over the period 2010-2013, with a volatility of 7.5% to be compared with 1.5% only for developing countries. So as a result, no surprise to see an average Gini index of 40 plus, highlighting major inequalities in income distribution, an average HDI index of 0.65, which is the lowest among developing peers except for sub-Saharan Africa, and a mere 2.7 and 4.5% respectively of education and health expenditures as a percentage of GDP. And as a bottom line, and this is a cherry on the cake, an average ranking of 140 over 184 countries for corruption, democracy, and free press. So therefore, unlocking the MENA region through changing the movement, stretching it into coherent and effective forces of change will require time. So far, no noticeable efforts have been undertaken at the level of the political economy factors that had ignited the Arab Spring, such as removing barriers for an equitable access to economic opportunities, such as fighting corruption and the privileges, and more importantly, favoring the emergence of a business-friendly environment for a vibrant and socially responsible private sector. Solutions should be at a scale commensurate to the problem. Institutions are crucial for competitiveness. Infrastructures are important for economic activity. Macroeconomic stability is essential. Primary education and health are important. Secondary education and training, goods market efficiency, labor market efficiency, market size, technology readiness, business sophistication, innovation, etc. I believe that policies should focus primarily on the basic requirements that are apt to promote our economies towards factor-driven ones. And only once this target is achieved, then to implement efficiency enhancers to shift towards efficiency-driven economies. And lastly, sophistication and innovation will allow our economies to compete. If we refer to the 2013-2014 Global Competitiveness Report published jointly by the EBRD and the World Economic Forum, we'll find out that the Arab MENA region ranked on average 76 over 148 countries, which may look not really bad. But this is mainly due to the oil exporting countries, which are ranked on average at 57, while oil importing countries are ranked at 99, with ACTs being ranked at 118 with respect to their weak macroeconomic environment, to their poor infrastructures, and to their reduced education and health expenditures. Within such poor competitive advantages, efforts in countries that have shifted from dictatorship to democracies, like Brazil, Mexico, and Colombia, to enact political reforms, mainly in the field of reducing energy subsidy, offers interesting lessons to our countries. There are also lessons to take from Turkey and South Korea in terms of implementing long-term comprehensive industrial policies. In 1960, Egypt and South Korea used to share the same GDP per head. Today, they are living in two different worlds. GDP per capita in Egypt represents 13% that of South Korea. Empirical studies also show that raising access to finance in our countries to the world average are apt to boost real per capita growth by 1% per annum. And we have to acknowledge that poor access to finance in our countries have long contributed to those accumulated economic inefficiencies by failing to provide large segments of households and individuals with access to affordable finance. 20% only of households in our region have access to finance. We have 50% less loan accounts per 1,000 adults than in developing countries, 80% less of deposit accounts, 20% only of SMEs have a bank relationship, with loans to SMEs representing a mere 8% of total loans. Mortgage loans represent 9% only of total loans, for respectively 15 and 18% for developing countries, for SMEs and for mortgages. Micro finance represents 0.5% of total loans, and leasing and factoring represent 1% of GDP, to be compared with 5% in developing countries. Another study by Bank Audi's research department on the standard of living and welfare in the Arab MENA region, based on 4 sub-indices: the standard of education index, the standard of health index, the material well-being index, and the quality of environment index shows that every single Arab country is lagging behind its benchmarks of upper middle income countries for the Levant and North Africa, and non-Arab oil exporting countries for the GCC. And therefore, closing the gap by 2030 would require $200 billion of yearly investments in the Levant, $230 billion of yearly investments in North Africa, and $700 billion in the GCC, despite what ever appeared high level of standard of living and welfare. This is what would let per capita income increase at an improvement of a minimum of 25% with respect to the IMF extrapolated trend. And this is also what would translate into into active labor force to total population increasing from 28% today to 46% at the horizon, which is the level of the benchmark. So the huge efforts and sacrifices required bears witness of the highly needed and long-awaited improvements in political governance and economic efficiencies. Arab revolutions have become honestly self-limiting, focusing more on individual sectarian political emancipation rather than collective economic transformation. The cost of inaction is very material, with downside risks on our countries to be drawn into long-lasting vicious cycles of economic stagnation and socio-economic struggles. And this is what make many say that maybe solution for our countries is authoritarian modernization. Lee Kuan Yew or Deng Xiaoping to keep order and make economy grow. Still, the Arab MENA region have the potential to achieve in the middle run political and socio-economic stability. Its demographic bonus, along with its huge natural resources, are apt to sustain high GDP growth rates in the foreseeable future, provided that we have enough transfers of capital and technology. And the magnitude of the latter in the medium term will depend upon the scope and depth of political reforms, which in turn will depend upon the capacity of the political parties and the civil societies to take a more active role in the current transitions underway and influence the course of politics. To be realistic, the fourth year of the Arab awakenings will shed the light on several trends, including the future of political Islam, the widening Sunni-Shia divide, the role of secular parties, and answers of government which are currently witnessing transitions. I'm referring more specifically to Egypt and Tunisia. But in the end, I believe that 2014 is going to be only another page in the first chapter of what is believed to be a long book of Arab history. But in any case, maybe the Arab Spring label will get over, but the struggle of the Arab people for a better future will definitely not. Thank you very much, Mr. Chairman.
Thank you.